Our friend Tim Seymour, Chief Investment Officer for Seymour Asset Management, CNBC Fast Money Trader. Tim, it's great to see you again, buddy.
Hey, Brian.
I guess
Good to be here.
From a valuation, I was trying to look at valuations on these, and then I realized that was dumb because you can't do a PE if there's no E. They have massive losses. How do you look at this group?
Well, I think with the airlines, first of all, you have to understand which balance sheets are the most impaired. And going into COVID, it certainly was American, and then you move from there with the big three. And Delta's got the best balance sheet. So when I think about coming out of this, I think about the dynamics on business travel still impaired, where leisure travel will be 85% of revenue versus 75-ish before COVID, and that the fares are going to be lower, and that we're going to get to 2019 revenues by 2023, 24 with a 51% higher debt load. So remember, look at these companies on an EV/EBITDA basis, not necessarily on a PE basis. And I think Delta ends up the best of the bunch. But remember, again, at the current price level, Delta's probably trading at almost 95% of 2019 normalized earnings. And I'm not sure that's exactly where you want to be. I'm long Delta, and I'd much rather be in Delta over the rest of the big carriers.
Yeah, I heard Kevin O'Leary on halftime. I think he suggests, I don't want to misquote him, he can speak for himself, but he basically implied a couple airlines might go out of business still. I mean, there's possibilities of, even as the stocks are going up, that bankruptcy could be a real possibility for some of these carriers.
Look, there's no question, and whether who's going to be allowed to fail, et cetera. We've seen this industry continue to kind of go through periods where it has collapsed under the weight of too much expansion and balance sheets. That even in the unexpected dynamic of COVID, there's been a lot of criticism of how airlines handled their balance sheets going into that. Other parts of this trade, though, and again, make no mistake, the travel dynamic coming out of the summer, I think, into the fall and obviously into next year is going to be a boom. And I think the pent-up demand is going to far exceed even the expectations, to be honest with you. I think some of the ways that I like to play it, if you look at the Hilton Grand Vacations, for example, which is more really timeshare, and that's a total leisure business. In other words, there's no exposure to business travel there. Yeah. It's an industry that was trading 40% cheap to the S&P coming into this. It's about in the same place now.
Shepard Smith here. Thanks for watching CNBC on YouTube.